Welcome back to the channel, everyone. Today I want to talk about how whistleblowers are being silenced. Now you may say, Tom, what kind of silencing are we talking about? And this right here is the exact kind of silencing. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, a Deutsche Bank whistleblower has just been found dead in his apartment in Los Angeles. And now what makes this even crazier is the fact that this isn't just any old Deutsche Bank whistleblower, this is actually the son of a Deutsche banker who committed suicide. And now I imagine this is the exact same kind of suicide that Jeffrey Epstein committed. I'm sure that this Deutsche banker definitely wasn't removed or killed or gotten rid of. But anyway, let's continue. It says a self-described comically terrible spy who is believed to have worked with federal authorities investigating the activities of Deutsche Bank and its ties with former President Donald Trump was found dead east of Lincoln Park, police said on Tuesday. He was found at 7 a.m. Monday morning in the 4500th block of Multnomah Street, according to the Los Angeles City Coroner's Office. He was reported missing last year and was last seen driving a red Mini Cooper on Riverside Drive, but weirdly enough, throughout his reported disappearance, his Twitter account remained active, and he also apparently maintained contact with friends and with journalists. The journalist said that he supplied him and other journalists with Deutsche Bank documents that highlighted the bank's deep Russia connections. It is very sad, but he does not suspect foul play. His last tweet actually came recently as of April 5th, 2022, so only a few weeks ago, and now he's all of a sudden turned up dead. I, for one, definitely suspect foul play in this case, considering what's happened to him recently and his father before that. Obviously, this case isn't directly tied to Citadel, it's more about the Deutsche Bank connections with Russia. But I think this really explains why we haven't yet seen Citadel whistleblowers or other whistleblowers as a result of the AMC and GameStop movement. Obviously, I'm sure that many Citadel employees and Melvin Capital employees and employees of other large hedge funds know what's going on is absolutely criminal and they do have verifiable evidence. But even though they have that verifiable evidence, they know that as soon as they blow that whistle, that it won't be long, maybe a few weeks, until they're found having committed suicide. I'm sure that these employees at Citadel, at Melvin Capital and these other hedge funds know that telling the truth is the right thing, but they also know just how rich and powerful these hedge fund owners or hedge fund managers really are. And they know that obviously if they do end up blowing the whistle, not only does it put them in danger, but also potentially puts their families and their friends in danger as well. And therefore, even though that blowing the whistle is the right thing to do, they know that it won't take long until they turn up dead only a few weeks later. However, it does seem like Bloomberg Finance is potentially blowing the whistle by relating other hedge fund managers to Bill Hwang. Bloomberg Finance said there's a lot of money managers out there, maybe they won't say it publicly, but they're probably doing the same thing as Bill Hwang, but they don't think that they're breaking the law. AKA there's many other hedge fund managers out there that are using ridiculous amounts of leverage, hiding their true positions, and increasing their synthetic short or synthetic long positions. But so let's also hear what Bloomberg Finance had to say.
What further details are you looking for?
If you read through the entire complaint, a lot of the folks in the markets are trying to figure out exactly how they can turn the screws on Bill Hwang. He did build up outrageous size and position in a number of these stocks. That itself does not sound criminal. So they'll really have to make a case as to why trading more than 10-15% of a stock's daily volume is wrong. Because he was trading a lot on swap, as we know, he believed he did not have to disclose his position when he got to about 5%. How does the government make the case that that was wrong as well? Do they show the intent? And of course, the fact that he was lying to the banks.
Yeah, I mean, it does get very complicated. And a lot of things that you say that Bill Hwang did, there are a lot of, frankly, money managers out there who say, maybe they won't say it publicly, but they're probably doing the same thing.
Yes.
And they don't think that they're breaking the law, just to be clear.
Yes, yeah. But when you have such a spectacular collapse, that will force a lot of people to ask questions, and people will not be satisfied unless there is clarity at the end of it. And prosecutors really want to make an example of someone. And if you were to get Raj Rajaratnam on the phone today, he would encourage you to read his book, Uneven Justice.
And I think that really summarizes it. There's tons of other hedge fund managers that are doing the exact same thing, but considering there has been such a spectacular blow up, the Fed and the government really need to make an example of Bill Hwang. Hopefully this does deter other hedge fund managers from doing the exact same activities that Bill Hwang was doing and steadily reducing their positions, aka covering their over-leveraged shorts. Whether they cover their over-leveraged shorts slowly or all at once, it will push the price of AMC and GameStop upwards because obviously these shorts are going to be buying back millions and millions, potentially even billions of AMC shares. And obviously for those funds to buy back millions and millions, even billions of shares, they have to buy them from us, the AMC retail investors, at whatever price we're willing to sell our shares at. This has led to tons and tons of memes, similar to the video that I made the other day about how Bill Hwang may have just sold out Ken Griffin. Guys, many of you may not have a lot of confidence in the stock market at the moment. There's all of this market manipulation and market fraud that seems to be going entirely unpunished. And that's why I personally also like to invest in cryptocurrency, especially now that Bitcoin is trending upwards. I personally like to use BlockFi, and right now, if you sign up with BlockFi using the link in the description below, you can currently get up to $250 in free Bitcoin. You can also invest in many other cryptocurrencies on BlockFi and not just Bitcoin. And that's why more than 500,000 people and 350 institutions globally use BlockFi to manage over $10 billion in assets. BlockFi is also a platform that's entirely free to use and requires no minimum balance. BlockFi also offers a rewards credit card with an introductory rate of 3.5% cash back on your purchases, also paid in crypto, so you can continue to accumulate more and more. There's also no annual fees and no foreign transaction fees either, and the card is currently available in the United States. So guys, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. There's also been a very interesting reply by Charles Payne. The Kubesi letter tweets saying Robinhood, ticker symbol HOOD, is trading below $9 for the first time ever. He said the collapse of Robinhood, beginning with the halting of GameStop and AMC, is one of the biggest corporate failures in modern history. He said it's truly a self-inflicted collapse, which has been great to watch. And Charles Payne tweeted saying the Robinhood and media friends that attempted to defend the indefensible actions taken to cripple retail investors triggered an irreversible collapse, and only their hedge fund overlords have come out on top. He said it's a cold world. This is Charles Payne agreeing with and admitting that Robinhood did perform those indefensible actions to protect those hedge fund managers, which has inadvertently triggered an irreversible collapse. Before I talk about the ongoing stock market collapse, I wanted to quickly touch on this very important tweet. He said, has anybody else noted just how quickly AMC and GameStop can run upwards, but then how much longer it takes the hedge funds to push the price of AMC down? AMC and GameStop can run up 50 to 100% in a singular day, if not more, but it takes them weeks upon weeks upon weeks to push the price of AMC back down. This goes to show just how volatile AMC and GameStop still are, and how these hedge funds are absolutely not in control, because a month or 2 months of those hedge funds' work and that hedge fund manipulation can be ruined in a singular day. Yes, I suppose technically right now we aren't in control either, but neither are the hedge funds really. Yes, they do seem to control the price movement on a day-by-day basis, but as soon as they slip up, months of work can be ruined in a singular day. And I don't think it will take long until these hedge funds do have a mess up big enough that triggers the AMC and GameStop squeeze. Inflation Tracker has pointed out that foreclosures are up 181% year over year, and has said that the housing market crash is starting. Zero Hedge followed that up by saying that mortgage applications are down by 8.3%. Previously, they were only down by 5%, which means that so far, mortgage applications are down over 13%. Zero Hedge says that this is also showing signs that the housing market is starting to crack. Obviously, back in 2008 or before 2008, the housing market began to crash first, before the stock market followed shortly after. And as FinTwit News elegantly pointed out, those Fed officials sold all of their stocks here to avoid any potential conflicts of interest. You may remember back in November, December, all of these Fed officials were touching on the conflict of interest from trading stocks, and many of those Fed officials actually sold off all of their stocks to avoid any potential conflicts of interest. And obviously back in November and December is right where the market was at its very tippy top position. The market will soon be breaking down through those recent January, February and March lows and continuing the market crash. And actually, if we look specifically at the Nasdaq has already broken through those previous January, February and March lows and is setting new April lows. Suburban Drone tweeted this saying it's the chart of the month. It's the worst month for the Nasdaq since October 2008, worse than March of 2020. And also said it's the worst April since April 2000, just before the Fed raised rates by 0.5% in May 2000. And obviously right now in April of 2022, the Fed is once again set to raise rates by 0.5%, if not by 0.75%. I do expect this market crash to continue, and I believe the Nasdaq could fall to those pre-pandemic highs, aka around $9,000 to $10,000 at the Nasdaq. And if we look at this chart from Stockseller, we've now seen a new all-time high in the reverse repo market. Today, the 29th of April, we saw $1.9 trillion in reverse repos. Back in December 31st, we saw 1.902 trillion, and we've now just hit 1.906 trillion. That $2 trillion mark, I think, is just around the corner. So guys, be sure to let me know down in the comments below what you think about these whistleblowers being silenced and about the current market crash. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.